It was a big day on Wall Street. June CPI came in cooler than expected. All five major banks crushed their earnings, and Apple hit an all-time high. The S&P 500 just closed higher by 0.4%. Communication led all sectors. Apple surged 4%, and the VIX dropped to 15.7. Welcome to Invest from Zero, your daily U.S. market wrap. I'm here every single trading day to break down what happened, why it matters, and what you should be watching next. It's Wednesday, July 15th, and we have a packed show today. Here's what's coming up. We'll start with a deep dive into the S&P 500, then move to the NASDAQ and the Dow. After that, we'll walk through all 11 sectors one by one, so you can see exactly where the money is flowing. Then we'll spotlight the biggest individual stock movers in the megacap space, both gainers and losers, with our stock of the day getting a full 30-day chart review. We'll check it on a macro dashboard. That means VIX, Treasury yields, gold, and oil. And we'll close with 3 specific things to watch before tomorrow's opening bell. If you're new here, this is the show that covers the U.S. stock market every single trading day. No fluff, no hype. Just data, analysis, and context. Hit subscribe so you don't miss an episode. Let's get into it. Let's start with the benchmark, the S&P 500. Today, the index closed at 7,572.40. That's higher by 0.38%, or roughly 29 points on the day. Yesterday's close was 7,543.59, so we're looking at modest gain. The big driver today was the June CPI report. Headline inflation fell 0.1% month over month, and the annual rate dropped from 4.2 to 3.9%. That's the first time below 4% in a while. A 10% drop in gasoline prices helped pull the number down. Core CPI held steady at 2.9% year over year. Markets loved it because it essentially takes a July rate hike off the table. On top of that, all 5 major banks, JP Morgan, Goldman Sachs, Bank of America, Citigroup, and Wells Fargo, reported second quarter earnings this morning, and every single one beat expectations. That combination of cooler inflation and strong bank earnings gave the market a reason to push higher. To put today's 29-point move in perspective, the S&P 500 averages about a 20 to 30-point daily move in comm markets. Today was a day where broad participation pushed the index higher. Breadth was solid. Now let's move to the other 2 major indices. The NASDAQ Composite, which is heavily weighted toward technology and growth stocks, gained 0.62% today, closing at 26,269. Growth names showed resilience. The NASDAQ came in ahead of the S&P 500 today, and that relationship matters. When a NASDAQ leads, it usually means risk appetite is strong and investors are favoring growth. When it lags, it could be a warning sign that the rally is narrowing. Today, the NASDAQ led, which is exactly what bulls want to see. The NASDAQ has been one of the best performing indices this year, and today's move continues that trend. Moving to the Dow Jones Industrial Average, it finished higher by 0.29% at 52,659. The Dow underperformed the S&P today. Remember, the Dow only tracks 30 blue-chip stocks, and it's price-weighted, not market cap-weighted. That means a high-priced stock like Goldman Sachs or United Health can move the Dow more than a lower-priced stock, regardless of company size. Blue chips were mostly flat. The key takeaway from the indices: all 3 are moving in the same direction, which shows broad conviction in the market. Now let's get into the sector breakdown. This is one of the most important parts of the show because it tells you exactly where the money is flowing. Today, 5 of 11 sectors finished in the green and 6 in the red. Mixed breadth today. Not everything participated. Leading all 11 sectors, communication, up 1.7%. In second place, consumer disc, at plus 0.95%. Third, financials at plus 0.68%. These top 3 sectors are where institutional money was flowing today. The middle of the pack, real estate plus 0.18%, consumer staples plus 0.06%, healthcare plus 0%, and industrials at minus 0.22%. Now the laggards. Materials came in at minus 0.28%. Energy at minus 0.79%. Utilities at minus 1.03%. And bringing up the rear, technology finishing down 1.1%. The spread between the best and worst sector today is 2.8 percentage points. That is a wide spread, which tells you there is strong rotation happening under the surface. Growth sectors are leading, which is a classic risk-on signal. Money is flowing into higher beta names. I always say, follow the sectors. They tell you the story before the headline does. Now let's look at today's biggest movers in the megacap space. Starting with the number one gainer. Apple, ticker Apple, absolutely surged today. Up 4.01%, closing at $327.50, a new all-time high. For megacap stock, a 4% move in a single day is massive. We're talking about roughly $100 billion in market cap added in just a few hours of trading. Apple has been on a tear, and the cooler CPI data gave growth stocks a boost across the board. When inflation cools, the Fed is less likely to raise rates, and that is great news for high-growth tech names like Apple. The volume was significant today, which tells us big institutional players are behind this move. When you see a stock hit an all-time high on heavy volume, follow-through is more likely. If you own Apple, congratulations on a great day. If you don't, the question is whether this move has more room to run or if it's already priced in. As a general rule, chasing a stock after a big up day is risky. But all-time highs tend to lead to more all-time highs. The old saying on Wall Street is, don't short a stock making new highs. Rounding out the top 5 gainers. Number 2, Oracle, up 3.6%, closing at $132.49. Number 3, Alphabet, up 3.2%, closing at $370.92. Number 4, Meta, up 3.1%, closing at $681.31. Number 5, Amazon, up 3%, closing at $254.96. All solid moves in the green. Notice something here. These winners are spread across different sectors, which is a healthy sign of broad-based strength. Now let's flip to the other side. The biggest loser today, Intel, ticker Intel, dropping 4.43% to $102.99. A decline like this in a major name always raises the question, is this a buying opportunity or the start of something worse? Here's how I think about it. Context matters. One bad day does not make a trend. What you want to check is, has anything changed fundamentally? If the business is the same as yesterday, a down day might be noise. But if you see follow-through selling tomorrow, especially on increasing volume, that's when you should start paying closer attention. The rest of today's biggest decliners. AMD dropped 3.5% to $529.14. J&J dropped 2.7% to $247.02. Caterpillar dropped 2% to $914.30. United Health dropped 1.6% to $418.52. The average decline among our bottom 5 is 2.8%. Significant selling pressure in these names. Something is spooking investors. Selling pressure was concentrated in a few names rather than being broad-based, which is actually a healthier sign for the overall market. As I always say, a down day is not a disaster. It's part of the natural rhythm of markets. Every stock in history, even the best performers over the long run, has had days like this. The key is understanding whether anything has fundamentally changed and whether the thesis for these companies still holds. Time for our stock of the day segment. Today, that honor goes to Intel, ticker Intel. Let's put this stock under the microscope. Intel dropped 4.4% today, closing at $102.99. Now let's zoom out and look at the bigger picture. Over the last 30 trading days, the stock has ranged from a low of $102.99 all the way up to a high of $140.94. That's a 37% trading range in just 1 month, which tells you there is serious volatility in this name. Traders love it, but it can be nerve-wracking for long-term holders. At today's close, the stock sits 0% above its 30-day low. The stock has room to run before it hits its recent high, which could act as a target for technical traders. This was the single biggest mover in our entire megacap watch list today. I chose it as stock of the day because when a name this size makes a move this big, it tells you something about the overall market sentiment and what type of stocks investors are favoring. If you're a long-term investor, days like this are noise. What matters is the quarterly and yearly trend. If you're a short-term trader, this kind of volatility creates opportunity. But as always, this is not a buy or sell recommendation. It's just data and context. Do your own research or talk to a licensed financial advisor before making any investment decisions. Now, let's pull up the macro dashboard. This is where we check the pulse of the broader financial system. First up, the VIX. Wall Street's fear gauge closed at 15.7, falling 5% today. The VIX dropped because the soft CPI data removed a lot of uncertainty from the market. When you take a rate hike off the table, fear drops. That puts the VIX between 15 and 20, a healthy normal range. Not too scared, not too greedy. Markets can trend in either direction from here. Next, the bond market. The 10-year Treasury yield fell to 4.55%, down from 4.59 yesterday. The 2-year yield initially plunged 14 basis points this morning on the CPI print before bouncing back. Bond traders are repricing rate expectations. The bond market is often called the smart money because it tends to price in economic changes before stocks do. When yields move, the stock market listens. Gold initially spiked to $4,100 on the CPI data, but then pulled back to $4,047 as rising oil prices reignited inflation concerns. That's a 0.3% decline on the day. Crude oil gained 1%, sitting at $80.15 per barrel, with fresh U.S. strikes against Iran keeping geopolitical risk elevated. Oil prices affect everything from transportation costs to consumer spending. Putting it all together, the macro picture today is cautiously optimistic. CPI is cooling, but oil and geopolitical tensions remain wild cards. Stay alert. All right, let's close out with my watch list for tomorrow. These are the 3 things I'm tracking most closely heading into the next trading session. Pay attention, because this is where you get your edge for tomorrow. Number 1. Intel made a 4.4% move today. Does it continue, or do we see profit taking? The first 30 minutes of trading tomorrow will tell us a lot. Number 2. The S&P 500 is up 0.4% for the week. Weakness that could extend if buyers do not step in. Watch for support levels. Number 3. Treasury yields are elevated at 4.55%. Any further rise could trigger a sell-off in growth and tech. Bond auctions this week will be key. These are the setups, the catalysts, and the risk factors that I think could move the market tomorrow. Write them down, set your alerts on these levels, and be ready when the opening bell rings. Preparation is the difference between reacting and anticipating. And that is your complete U.S. market wrap for Wednesday, July 15th. Today we covered the S&P 500, the NASDAQ, and the Dow Jones. We broke down all 11 sectors, went through the biggest movers both up and down, gave our stock of the day Intel a full 30-day chart review, checked the macro dashboard with VIX, bonds, gold, and oil, and finished with 3 things to watch for tomorrow's session. If you found this valuable, please hit that subscribe button. Turn on the notification bell so you get these episodes every single trading day. Share this with someone who's trying to learn about the markets. Drop a comment below and let me know. Are you bullish or bearish heading into tomorrow? I read every single comment and try to respond to as many as I can. Remember, nothing in this video is financial advice. I'm just sharing data, analysis, and my perspective. Always do your own research or consult a licensed financial advisor before making investment decisions. I'll be back tomorrow with another full breakdown. Until then, invest smart, invest early, and invest consistently. This is Invest from Zero. Good night.